Currently, inflation is up 8.3% from the previous year, much higher than the Fed's benchmark target of 2%. What happens when the interest rate reaches a peak of 0.75%? Interest rate hikes typically occur in increments of 0.25. Greetings to all, and thanks for returning to Everything Tesla stock. With the exception of Tesla, inflation has been a significant obstacle for enterprises. Commodity prices have skyrocketed in recent months, impacting profit margins and sales for a variety of businesses. Tesla has seen price increases for its automobiles as a result of this, as raw materials and components required for car manufacturing have become more expensive. Elon Musk recently revealed that Tesla is suffering greatly from inflation, adding that the company's car costs are currently at unbecoming heights. In the face of a collapsing economy, Tesla is finding it difficult to meet the demand for its cars and avoid raising prices any higher. Even while it appears like the carmaker is starting to stabilize, Tesla may still need to contend with the Federal Reserve's recent announcement of another interest rate hike. Do Tesla investors need to be concerned about this? You're about to learn everything there is to know about Tesla, but before we do, please remember to like, subscribe, and turn on notifications if you enjoy this kind of stuff. Recently, the Federal Reserve announced raising interest rates by 0.75% for the third time in a row. The Fed claims that this was done in an effort to lower the consistently high rate of inflation. The economy has been severely damaged by inflation over the past few months, and fresh economic forecasts indicate that growth may slow down in 2023 and the remaining months of this year as well. The federal funds rate has increased for the sixth time in a row, reaching its highest point since 2008 at a range of 3% to 3.25%. Jerome H. Powell, the chair of the Federal Reserve, believes that in order to overcome inflation, commodity prices must decline and supply must keep up with demand. The Federal Reserve anticipates that by raising interest rates, expenditure will decline, bringing supply and demand back into balance and reducing inflation on the cost of goods and services. The Fed thinks that one of the main causes of inflation is the economy's continued excessive demand in the face of a declining worldwide supply. Consequently, cutting back on borrowing and consumption may cause prices to decline. Powell said that if the Fed fails in its mission to lower the prices of commodities, individuals will suffer much more from rising inflation, particularly those in disadvantaged households. He acknowledged the negative effects this will have on people, but he also said there was no easy way to do it. Speaking on the subject, Stephanie Arrington, a former Federal Reserve economist and vice president of the Brookings Institution's Economic Studies program, explained why she believes the action will be more advantageous in the long run. The financial expert believes that raising interest rates now is preferable to the Fed giving up on fighting inflation halfway through and then having to start over when higher rates arrive. What does this signify, then, for Tesla's stock price? A higher cost of capital due to rising interest rates would make it more challenging for businesses to borrow money and pursue their ambitious expansion plans. Elon Musk responded to this news by saying that he believes inflation is already declining and hence he is against the change. Musk stated at some point in July that he believes inflation will go down as the year draws to a close and that commodity prices would eventually start to decrease. Powell, though, does not appear to hold the same viewpoint as Musk. He claims that his sole goal is to lower inflation by imposing capital restrictions, not to assist investors or improve the stock market. Although it may appear that the Fed is attempting to destroy Tesla's stock, this is untrue. It is merely attempting to impede economic growth by implementing tighter monetary policy and higher interest rates, which will hinder businesses' ambitions for expansion and development. On the other hand, other analysts think that the Fed might be going too far and that there will be problems when capital access becomes too limited. These specialists believe that the higher interest rate could ultimately lead to a grave error and be devastating in the long run. Do you believe the predictions made by these analysts are accurate? Tell us in the comments below. Given that interest rates are at an all-time high, the economy will probably contract as a result. The rate increase has several negative effects, including higher monthly debt payments for Americans and future increases in the cost of debt for credit cards, auto loans, and other loans. It has no bearing on existing fixed-rate auto loans, though. However, they will raise the interest rates on newly obtained auto loans or those with variable rate financing. According to Greg McBride, chief financial analyst at Bankrit, the recent increase will cause the average interest rate on a 60-month new auto loan to rise from 3.85% at the beginning of the year to 5.75%. For a $35,000 new automobile, this equates to an extra $31 in monthly auto financing payments. Many customers might even be dissuaded from getting auto loans at this rate. Additionally, an increase in the unemployment rate is anticipated. Chief economist at RSM, Joe Bruce-Wheeler, revealed in a recent report that job losses could exceed 5.3 million, meaning that at the top end of the range, unemployment rates would be 6.7%. This is necessary to bring inflation rates back to 2%. While interest rates do not directly affect mortgage rates or the terms of other loans, they do have an impact on the cost of borrowing for banks and other financial institutions, which in turn influences the price of loans. Will Tesla's stock valuation be impacted by this new interest rate, is the question. It's feasible, but that doesn't guarantee it will happen immediately. Investor expectations are the primary factor influencing the valuation of Tesla's shares, as well as just about any other company on the market. The stock market is likely to respond if Tesla investors believe that increased interest rates will unnecessarily restrict capital and impede the economy. Tesla's stock price fell by around 30% after the Fed's recent revelation, which was far more than its 15% rise over the previous year. One could argue that investors' fears and uncertainties about the upcoming quarters are the cause of this. The increase in interest rates might not have much of an impact on Tesla's valuation if these expectations shift. Despite high borrowing rates, Tesla may be able to increase its profit margins in the upcoming years due to a few factors. According to well-known stock trader and YouTuber Dave Lee, Tesla has numerous advantages in the future. To start with, there is a great market for their goods. Secondly, they now have good margins that are getting better. Thirdly, they are opening more plants in Berlin and Austin, which should boost margins due to the expense of increasing manufacturing efficiency in these new facilities. It is correct that Dave Lee thinks Tesla's FSD beta software and the upcoming U.S. tax credit will increase the company's earnings and profit margins. These elements are probably going to raise investors' hopes for Tesla stock, which will keep the price from falling even more. Another event that has investors excited about Tesla is the much-awaited AI Day 2. This year in June, Elon Musk revealed that Tesla's second AI Day will take place later in September. Along with other intriguing technologies that the automaker is working on, he claims that a working prototype of Tesla's humanoid robot would be unveiled at the event. Many experts and Tesla enthusiasts are excited about this event, and many express their optimism that AI Day 2 will ultimately increase Tesla's valuation. Investors are waiting for information on the Tesla RoboCab and its Dojo supercomputer in addition to the Tesla bot. Investors might not have any cause to mistrust Tesla's potential or to reduce the firm's valuations and price targets if the business is able to produce compelling updates on these initiatives. As more of a recruiting event, Tesla's AI Day might actually be able to draw in the top engineers to work on these projects, bringing them to fruition. Even though Tesla has a great deal of potential to grow its income and automobile sales in the upcoming years, it's still critical to monitor market performance. Dave Lee says that there might be more volatility in the stock market in the upcoming quarters, and that Tesla's stock is still highly susceptible to the negative effects of the interest rate hike. Similarly, other analysts forecast that inflation would stay high through the end of the year, maybe reaching 4.5% based on the Fed's preferred measure, before declining to more typical levels the following year. Tesla might currently be able to combat inflation with its current tactics, but you can never be sure what the future will bring.